Rajkiran Rai joins us now, Managing Director and CEO of Union Bank of India. Mr. Rai, good morning. Thank you for joining us. Now, before we go to the results, as you see increased inquiries for co-generation loans with NBFC, have you tied up with anyone? What is happening on that front?
Yeah, we have also tied up with two NBFCs for this, and there are about 3-4 NBFCs where we are in the advanced stage of negotiation. So this is a new way of lending, and it will be rewarding, but then the model has to emerge.
So then, just to clarify, you're lending to pedigree NBFCs?
Yeah, actually we continue to lend to good NBFCs, and there is a growth in NBFC sector for us. We are lending.
Which were the large recoveries this quarter, and what do you anticipate going forward? The recovery guidance for Q4, is that huge?
This quarter, actually, the recovery numbers are contributed by three big accounts, particularly SR Steel, Ruchi Soya, and Prayagraj. And we also saw some good upgradation. If you put recovery and upgradation together, this quarter has a number of more than 2,800 crores. So that has helped us. Going forward, actually, about 1,500 crores is the estimate from NCLT accounts for the recovery for the Q4. Out of that, 1,200 is going to come from the list 1 and list 2 of RBI, where they are in the advanced stage of settlement, including one big steel account. So another 1,500 crores we are estimating because of certain upgradations which are happening, which are outside NCLT, but then there are upgradations, and generally Q4 our recoveries, particularly from the OTS and other schemes what we have done, a peak in the Q4. So we are expecting a recovery and upgradation totally of about 3,000 crores.
Right. So where exactly will be the growth and what will be the focal point going forward? Do you see real estate traction picking up?
Actually, for us, last quarter we saw growth in NBFC sector, the food processing, and that kind of industries. So as we go forward, we see good traction on the good real estate accounts. We have few sanctions, particularly on the LRD space and where we are lending. So we will see good traction in these areas. The NBFCs will continue to grow. Now since we are adequately capitalized, so we will see good traction in the infrastructure, because there are certain sanctions where the disbursements will happen in Q4.
Right. Also, new announcement for banks delaying the classification of NPAs because of genuine delay. How exactly does it impact you?
See, what has happened on the real estate side, the problems are more from the demand side. Actually, the sales are not happening, and those issues are there. So it is not a problem with the real estate company, it is more from the demand side. So this kind of forbearance definitely helps. But anyway, we are not a very direct lender to the real estate. My whole book is about 3,800 crores, which is specific to this sector. It is a subsector within the commercial real estate what we declare. So and out of that, we feel that about 700 crores is eligible for this dispensation. But as of now, we are not seeing any stress in this book, and we don't foresee the requirement of using it. But then logically it makes sense that we give them 1 year more time so that the demand picks up and this sector unnecessarily doesn't get into problems.
Slippage is an asset quality guidance, but they were a bit elevated this quarter at 5,000 crore due to large HFC. How has the figure been for you if you adjust for this one-time charge?
Yeah, last quarter the slippage numbers are high because of one big HFC account which slipped during Q3. So that amount was about 2,260 crores. If you take that out, our slippages are normal as per our projections. So that's why numbers are high. But despite that, if you see our net NPA numbers, they are stable below 7, and our gross NPA actually has come down. So I think we have a good control on our asset quality now, and the stress book also has substantially come down. So I'm very sure going forward, our projection of having net NPA close to 6% will be reality in Q4 and Q1 of next year.
So then what is going to be your credit cost guidance going forward?
It is 3% for the full year.
Okay. And what kind of margin trajectory can we expect going forward?
So our operating efficiencies have moved up substantially in the last 1 year. We are very steady in improving our cost to income, our NIM and other operating efficiencies. So that is getting reflected in our operating profits, which is showing a very steady increase. So I think NIM actually, if you look at it, the global NIM at around 2.47 is a very substantial improvement, and we hope that in the coming quarters this improvement in NIM will be very visible, because we have very strategic plans in improving our net interest margins.
Okay, and just to clarify, you have no telecom exposure, is that correct?
We do not have exposure to the two telecom companies which are likely to be in trouble. We do not have any exposure.
Right. How exactly was your treasury and fee income? Because that has underperformed in this quarter. Does it look like it's going to improve fourth quarter onwards?
Yeah, during Q3 actually the treasury did not perform well, because if you have observed, actually it has negatively contributed that way if you look at it, because the yields really moved up during Q3. So we had to make some mark-to-market provisions, and the treasury income was hardly 82 crores from sale of investments. So it went down substantially. It is not even 1/4 of what we did in Q2. So, but then this quarter seems to be very good. The way the yields have gone down, particularly after certain steps announced by the Reserve Bank in the last monetary policy, the G-Sec yield has really gone down, and the treasury has really started performing very well. So we are expecting a good contribution from the treasury side. And the other is the recovery in write-off accounts. So last quarter, the recovery from write-off accounts are upwards of 300 crores. We expect that these numbers will improve further. So that way, and even other fee income and all that, they are very steady. So we expect much better performance in Q4, particularly aided by the treasury income in Q4.
Right. So given that you have large recoveries, how exactly will you be provisioning in the fourth quarter as well as going forward?
The provisioning actually will continue to be there. Like if you look at my net NPA, despite slippage of almost 5,100 crores, my net NPA has moved up by hardly 700 crores. We are still below 7. So that means either by recovery or provisioning, we are able to maintain our net NPA levels, and we don't foresee any big chunky slippages. The corporate SMA2 book is hardly 2,000 crores now. So I think we don't expect in at least next 3-4 quarters any major slippages on the corporate credit side. So it will come only from MSME, retail, agriculture kind of thing, and we will be able to balance it off very well. And the aging provisions are also moderating. So as we go forward, I think the credit cost will come down substantially. So with that, definitely the net profit will move up.
All right. Capital adequacy, are you well secured going forward? The recoveries should aid considerably here.
Yeah, as it is, see, my CRA are at 14.7 and CET1 of 11.6. I think we are very comfortably placed actually on the capital side. So we don't foresee any problem on the capital side which can result in a good credit growth. So we are planning our growth accordingly.
Leave it there. Thanks so much for joining us on that, Mr. Rai.